Thanks for joining us at the Economic Countdown. Please remember to like, share, and subscribe to the channel. So we're still suffering from the COVID pandemic of 2020. Are we going to see a dollar crash in 2021? Congress gave final approval to Biden's $1.9 trillion coronavirus stimulus package. The package amounts to one of the largest bailouts in American history. So the question is, who's going to pay for this $1.9 trillion and where are they going to get it? Well, the government certainly doesn't have any savings it can write a check on. And it actually has an insurmountable mountain of debt that now totals over $28 trillion. So the government won't be able to pay for Biden's stimulus with any money that they have in the bank now. And they probably won't be able to get the money through taxes. The U.S. government generates about $3.5 trillion a year in tax revenue, but that money is already given to the general budget. So tax money can't pay for this stimulus because it's already spent in the general budget. The government could cut $1.9 trillion in spending from the budget and then reallocate that money to pay for the stimulus. But we all know there's no way that's happening. That would be political suicide for Biden and a major stain on the Democratic Party. It just won't happen. So here's where they are. The government needs $1.9 trillion to pay for this bailout. They don't have it in savings. They can't raise the money through taxes. And they aren't going to reallocate any of the money they're spending now to pay for it. So where are they going to get the money to pay for this bailout? Well, there's only one option left. Print it. To obtain the money the government needs to pay for Biden's stimulus, America must continue on its course of quantitative easing. The federal government will create new debt bonds and will then exchange those bonds with the Federal Reserve for freshly created money. It is important to point out here that this is not a partisan matter. Biden's stimulus package will have to be funded by printing new money. And that's exactly how Trump's stimulus packages were paid for as well. Quantitative easing isn't a political divide, as both parties are playing the game here. To pay for the COVID bailouts to date, the Federal Reserve has added 25% to the total supply of U.S. dollars. Let's repeat that. In the past 12 months alone, the Federal Reserve has added 25% to the total money supply. And that doesn't include Biden's new stimulus package. How much more can the federal government add to the supply of U.S. dollars before the value of the U.S. dollar collapses? How much will it take to print it into the grave? The real answer may be, who knows? But it really seems like the politicians want to find out. And they will probably say the country needs another stimulus after this one. Most likely, the House is going to agree that Biden's first stimulus package was a good start, but there were gaps that could have been filled in, and another stimulus is needed to correct that. So when will the money printing end? It's really anyone's guess. Like addicts, they started with a little and now just keep piling it on. Without a doubt, these massive injections of new U.S. dollars will, sooner or later, come to have a devastating effect on the value of our currency. And when that happens, there may only be one place to turn for wealth preservation, and that's gold. We've talked about this before. Back in 2008, the federal government began using quantitative easing for bailouts caused by the housing crisis. They did the same thing back then that they're doing today. They printed new money to pay for bailouts. A few years later, this caused the price of gold to rocket to an all-time high of over $1,900 an ounce. It's hard to say where all this gold will settle after all this money printing. $5,000 an ounce? $10,000 an ounce? There's absolutely no doubt the U.S. dollar will be worth a lot less in the near future. Get ready for the dollar crash and runaway inflation coming soon. Thank you for watching the Economic Countdown. Please remember to like, share, and subscribe.